Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this wrap-up is for Tuesday, the 5th of October, 2021, and we're just getting on, 6:15 in the afternoon, evening, whatever you want to call that. All right, before I get too far, tomorrow, that's Wednesday, October 6th, at 12:15, I will open up the live chat room that I will be having where I'll show charts and answer your questions. It's by invite only, or you have to join in order to get it. You need a user ID and a password. If you click up here, if you're watching me on your pads or if you're watching me on your computers, just move your cursor. You'll see the icon come and go with it. If you're using an iPhone or an Android phone or any, and you can't do that, call us at 866-973, the old-fashioned way. That's 866-973-2077. My staff will send you out the invite. I have no other way to do it. The invites went out on Monday. They went out today, so if you didn't get it, you're not about to get it. That's the only way to do it. So where are we? Well, things haven't really changed. The debt ceiling talk is still going nowhere. It's your fault, your fault. Mitch McConnell, you had 3 months, you didn't do anything. Biden administration, you're holding it up. You're holding America hostage. What do you have to lose just by doing this? Well, flip it around. That could have been just as easily President Trump, right? And Miss Pelosi. I mean, come on. Nothing has really changed. I told you when this happened what was going to happen, and all that happened is the Republicans are now in the minority, and they are taking on the Democratic role of fighting everything that President Biden wants to get. It's just a flip-flop of a year ago. That's where you're at with it. Unfortunately, I don't know what it will take to get presidential candidate in office that everybody likes and things in Congress start getting done. That would be the dream, right? So where are we? We're in Chop City. Now, that's not Chinese talk. It is really Chop City. This early part of the month is known for this wildness that you get. You get false starts one way or the other. Huge break that happened in September. You get a bounce. The press will say, look at that. It made up everything it's lost since Monday. Well, Monday you were down 400 points. And I mean, I laugh at it, but it's the way it is. If you looked at most of the stocks that make up the NASDAQ, you got a 5 to 10% correction in the vast majority of them. You're in corrective territory. You see this as one of the stellar performers in Microsoft. Will this gap get filled? Oh, yeah. I'll be shocked if it doesn't. I mean, anything can happen, but I'd bet, well, not the ranch, but maybe a small, one of the little stable places on it, that it gets filled in fairly fast. When you look at these swing lines, you have no trend. Now, what you did do, though, is you've stepped out of the downtrend. If you look at this right through here, lower highs, lower lows, you're in a downtrend. Then you have a big outside day down. Unfortunately, you take out that day's high. So now you've got a market that has a lower low and a higher high, and it gets worse. Now you go down yesterday, Monday, and you take out the low of an outside day down. So you've taken out the high of an let me get this right. You took out the high of an outside day down and the low of an outside day up. Go look on your charts. Find me 5 examples of it and write me about them on a big trading chart. It's going to be hard for you to find them. You're going to spend a lot of time trying to find them. That's why I said 5, not 50. It's not a common pattern. Patterns aren't everything, but it just shows you what the market's doing. It's not decisive. And in the process, you have a lower low, higher high. You're not in a trend, but you're no longer in a downtrend. What you do have is downside bias. The market's under the 18-day average of closes. The 100-day average is the next support zone, along with the Bollinger Band, which the market has been hitting every day except today. It broke away from it. Finally, in the past week or so, no longer hitting that number. One day doesn't prove anything. It could be a relief point, and the market is oversold. That's why I think you're going to fill the gap. It won't take too much to get that done in the chart, but there's no way I see a buy signal coming. I think the market will have serious trouble anyways at 294, the 18-day average of closes, and to get a higher high, higher low pattern to be bullish, very difficult right here. In Apple, why stay short under the 100-day average in the lower Bollinger Band? I think this downtrend ran possibly into its first major support. Now, have we ended the downtrend? No. What about what's going on in momentum? Both numbers were under 20 today. The day before, they're under 20, and the day before, and I want to go another one, the day before. So you have 4 days in a row. That's called embedded. It means that you've converted an oversold condition into a downtrend. A sign that the market wants to put on a serious rally will be the red line closing over 21. That should lead then, in my work at least, to a potential rally back to wherever the 18-day average is. Until that occurs, these rallies are being sold by the pros, still trying to get back to the lower Bollinger Band. Eventually you go to the well one time too many, but you never know when that one time is. In ARC, you've had this embedded reading. It's the same pattern. Clear downtrend. You hit the Bollinger Band on rallies. The pros are waiting to sell it, in my opinion, because the 18-day average, the red line, which is the K line, until it closes over 20. And why they're called K and D lines, beyond me also. George Lane came up with slow stochastic. I have no idea what a stochastic ever meant. I mentioned that to him. I said, is it a real word? So he was explaining why it is. And then K and D lines. Why a K and a D? He knew. I don't know. But there you go. So if it closes over 21, then I think you can get back here. Until then, I think the pros are aggressively hitting it. Can you imagine the fund money that is leaving her? She was the stellar performer a year ago. She's not this year. This year it looks ugly. XLI. The market is fighting a battle against the 18-day average of closes. Today's high at 125 did not take out the 141. The market held on the break the 100-day average to the lower band. That is where I think the bears took their money off the table. Why not? Now they'll look at the resistance all the way up there. By the way, clear that 141, you're through with this leg of the downside. XSD, oversold, running the lower Bollinger Band. Oversold, I think, keeps the smart money away. Wherever it's going, let it go. There's no reason to be a buyer, and oversold is one of those checklist items that says, no, 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 might be too dangerous to participate on the short side. Now, the Seymour Cannabis ETF, isn't that an interesting name? Lower highs, lower lows. I'm still watching THCX and some of the others. They're all bearish. These are the recent lows of the move. There's still nothing favorable here. Eventually short covering will set in. Eventually the trend will end, but it hasn't. So it's still bearish. It's not embedded, just a market that doesn't have much going for it. Homeowners ETF, be careful here. You're getting close to where the red line, the 18-day average, wants to get under the green, the 100-day, and possibly be embedded at the same time. Both numbers under 20 today. Under 20 the day before. Under 20 the day before and the day before. It's embedded. Therefore, the odds continue to favor. Keep what I'm saying here, that you can even get into this area. There's nothing bullish about this chart. XLE and the energies, embedded reading, bullish. I think if you had a break, the pros would be trying desperately for the Johnny-come-latelys to still be buying here. Now, let me give you the scenario. We get into December. It gets to be 25 degrees. Then one day we get to 0. And your natural gas bill goes crazy. In Europe, in 6 months, their natural gas has gone up 33%. They're not at winter. That's the recent 6 months. What are they going to do come the winter time? This is a serious issue. It is why China's now pulling out all the plugs. They have told, remember how they were anti-coal? They've gone back and told what they define as a good coal miner. I don't know what that means, an approved one. Go mine and mine vigorously. And banks, lending institutions, give these guys the money they need. We're not going to freeze this winter. That's what they're doing right now. They're doing it also in other parts of energy as well. When you look at the emerging markets, pretty oversold. You hit your lower target. You're oversold here. I don't know. It might be time to grab something off the table is what I was thinking. In gold, gold tried yesterday, not today, to throw out a buy signal. it has higher lows, higher highs over the 18-day average. The same exact signal happened in the futures. The futures survived the sell-off today. It fell from that buy, $1,800 a contract. You fell pretty hard here today. And now if you take out 63.47, you put into play the 161 level. In my newsletter for the futures traders that I do, I have a full research product. It costs $60 a month. I define stagflation, what it means, the impacts it has had, all the events around it, because if we get into stagflation, there are certain plays in spiders and ETFs that track gold you're going to want to watch if you get into it. When you look at the gold miners, you lost the embedded reading. Just like a submarine. Go to the surface. Go to the surface. We got to get out of the water. We don't want to be bearish anymore. That's a sign. Now be out of shorts. You closed over 21. The odds favor a move back to the 18-day average. The first signal from all this that this break is over. The only time you can get bearish again where this becomes false is tomorrow. The day after it occurs, by getting these numbers to both close under 20 again. A 26 reading is a lot to recoup. That's all I'm saying. TLT, look at the battleground. We got to the Bollinger Band, and I said if you rally, and I said it here, watch out. You've got the 200-day and the 100-day averages resistance. I called that, and that's still how I'm seeing it. Not a trend, certainly downside bias, but too oversold just yet for me. FXE, okay, and watching it still. Euro coming down, get the red line to close up over 20, then I'll change my opinion. So I want to remind you, we have what tomorrow? We have at 12:15 when I'm going to open the chart room is what I like to call it, we're going to have you write in any questions. But if you're going to write me about spiders, ETFs, and individual stocks, please write it to me well ahead of time. Why do I ask that? Because there's so many thousands of them, let me prepare the charts. It's that simple. I'm not scared of what you're going to ask me to cover. I don't have the time to call up all these different charts, put on window envelopes and everything. I can call up any chart without the window envelopes and talk. That won't be a problem. So to get to this, just take your cursor, move it up if you're on a PC or one of your tablets, that'll work. If you're on a phone, people have said, Ira, it won't work for me on my Android or my iPhone. I don't know. If it doesn't and you can't do that, I've got a secret way to do it. Now, get your notes out. This is it. We have a phone that works. It's called 866-973-2077. Call my staff. I'm going to put this, oh my gosh, I don't want you to see it too much. I'll repeat it. 866-973-2077. They'll get you set up. Give them time to do it. You have a good night.